What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down what the news, the data, the technicals, and the algos are telling us about Tesla and the overall market, and why they're suggesting the market may get a bit of a bounce for tomorrow. Now, before I break anything down about this and why under Tesla may actually bounce tomorrow, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and 5 out of those 7 free stocks could be a free Tesla share. It's a limited time offer. The offer ends in just 3 weeks. Make sure you check it out before they run out. With that out of the way, let's get on with the video. Tesla was down 3.04% for the day, and as I mentioned previously, we are showing some signs of relative weakness for Tesla. Now, despite the fact that that happened, Tesla is at a very important level, and that's around the 180 range. And that's actually where Tesla has a bit of a demand zone. We could see Tesla try to bounce off of this tomorrow, and that's because of what we're seeing with the algos and the overall market right now. Now, to start us off, we had a very crazy day for the stock market. If you look at this on the 3-minute time frame, the whole market is essentially moving on a very similar algo. And I say this because when you look at Tesla, this thing came down and we were actually dropping pretty hard throughout the day. But at the very last 20 minutes, we saw Tesla get bought up pretty hard. And Tesla went from 180 all the way up to 182. That might not seem like too much to you, but if you look at SPY, something very similar happened. The market was down. SPY was down to 396. Last 20 minutes or so, this thing flies all the way up to 399. And we actually closed green. Same thing with the QQQ. All right, the QQQ was down. Very end of the day, big push up. We saw the QQQ also close in the green. Something similar happened to Apple and throughout almost the entire market. If you look at AMC, AMC was in the very mid fives. This thing pushed up pretty hard at the end of the day. So why is this happening? That's really the question on a lot of people's minds. And this is happening because of the 0-day to expiration options, and also because of manipulation and the constant buying pressure that's adjusted by algos for market makers and also different institutions when they start hedging. But if you look at the algos right here, right, the white line right here is actually the price of SPY. This is the SPY chart, the white line, and this is basically the call premiums to the put premiums. And you could see at the end of the day, we saw a big change in the algos. At the very beginning, it was very, very bearish. Look at the momentum, super, super bearish throughout the majority of the day. That's why the market was red. It was selling off after the comments made by Jerome Powell, and also because of the fact that the market is getting closer to pricing in a 50 basis point rate hike, as the Fed has been more hawkish lately than before. But at the last minute, once again, this is manipulation. Look at this crazy, crazy algo buying at the very end. Look at the calls, look at the overall premiums, the net volume. It was absolutely insane. They're doing this once again, very similar to what we saw last week. I was showing you guys the facts that when so many people are shorting the market at once, and also if too many people are just on one side, market makers come in, they adjust the algos, they start buying up very hard, and you are incentivizing them to do the same thing as what we saw last week. So this is telling me that look at Max Payne for tomorrow. I don't think tomorrow is going to be as crazy as Friday, but during one of these days, maybe even as soon as tomorrow, we're going to likely see the market rebound. It's very probable. We're likely going to see the market rebound because we have a 2.09 put to call ratio on SPY for Friday, which means the majority of people have puts. They're betting the market's going to crash again and again. They're also going to load up on more options during, I would say, the same day, thanks to the fact that they can make a lot of money if they are successful, thanks to 0-day expiration options. And this actually leads to even more volatility. Now, one of the problems with this is the fact that we have big data coming out. Now, to start us off, we had the JOLTS job openings, which was higher than expected. This tells us that the jobs market is still very, very strong. Jerome Powell said today in front of Congress, in front of the House, he wasn't necessarily as stringent as he was yesterday. Yesterday, Powell was just getting hammered with very, very tough questions, and he was forced to be very hawkish. That's why the market sold off pretty hard. But today, it wasn't necessarily the same. A lot of the politicians there were just playing politics. Some of them said some insightful things, but for the most part, it wasn't as big. But they did actually force Powell to say a couple of hawkish things. He reinforced his dominance. He reinforced to everyone that the Fed is not playing a game. Their goal is to get inflation down, but they're simultaneously trying to keep employment up. They don't want to cause a recession or things like that. That's what Powell is trying to say. Now, right now, many economists are disagreeing and saying you have to create a recession. But Powell made it very clear, let's not worry about that right now. Right now, they're just focused on trying to, make the landing not as hard. Powell is saying it's going to be very bumpy. And on top of that, the Fed is hinting at them giving us a 50 basis point rate hike for March. It's becoming more probable than before. So that's why the market has been dropping. We're actually pricing in 50 basis points more than before. Now, do we have to keep crashing tomorrow for this to actually, reach 100%? That's not really guaranteed as of right now. We're going to just keep crashing. What I'm thinking is the market might come down a little bit more during the very early hours, especially because we have initial jobless claims coming out tomorrow morning. They're coming out actually before the market opens. So if this is hot once again, the data was suggesting that's very likely, the market might gap down. But as time goes on, just like what I was showing you with the algos being adjusted, look at this right here, we might see something similar where the algos start buying the dip like crazy. We start to see Wall Street and many institutions accumulate the shares like crazy. They start pushing the market up. This is also because of hedging before CPI. They're doing all of this buying, which could prop the markets up because it not only benefits the market makers, but also because of hedging and other factors as we're getting very close to CPI. CPI is actually just about 4 trading days away. It's going to be coming out before the market opens on Tuesday, which means we have Thursday, which is tomorrow, we have Friday, then we have Monday, the last 3 full days before CPI. It's super, super close. So all of this data is basically telling me, okay, if I was the market maker, if I was one of those institutions, I would try to prop the market up and squeeze shorts for Friday and also for part of tomorrow. And I believe that's very likely to happen again. So is the whole market guaranteed to bounce tomorrow? I mean, I can't guarantee anything, right? But I think it's very likely it should start tomorrow. If it doesn't even start tomorrow, it's most likely going to happen on Friday. I don't think that the people that are mostly in puts are just going to come out on top. I think the market makers are going to cause pain. Now, for Tesla, I want to now transition to Tesla before I talk about the charts. Real quick, Tesla has relatively low inventory levels right now for the Model Y, telling me that once again, this is good news on a daily basis. It's good news. Demand is still high for Teslas, no matter what anyone tries to say. Now, when it comes to Tesla stock, we did get some scrutiny for Elon Musk from the mainstream media because there was a lot of controversy involving some things he said involving an employee. I mean, I really didn't even look way too much into it. I'm just not as focused on things like this. I see things as like this pretty petty, if anything, and I've been a lot more focused on the charts. When I did actually briefly look at it and skim through it, it just didn't seem that significant, but the media is making a very big deal out of it. Whatever happened, Elon Musk did apologize anyways, so it is what it is. I want to focus more on fundamentals though. Tesla has been pushing for the new full self-driving beta version 11, and this is once again a new update that's going to improve the neural nets of the product. This is important because it's going to help the full self-driving beta improve its perspective around the world. It's going to help it actually see things a lot better and also improve its driver assist performance simultaneously on highways. So another update for the full self-driving beta. Good news, but always remember it's a beta, so it's not going to be as perfect as we expect it to be in the future or even close to those levels. But we were hit with some bearish news for Tesla, and that is because of the fact that an analyst has downgraded their Tesla stock price target. They're actually saying that Tesla's a little bit overvalued and that Tesla is more of a hold than a buy. This is making a lot of headlines from a very big analyst known as Adrian Janoschik. I do apologize if I said their name wrong, but That's very important once again because we're seeing a big shift in sentiment right now for Tesla investors, and they're also criticizing the company for not having a $25,000 car yet. Once again, it's not Tesla's fault, and I do believe that Tesla has a lot of plans for this. Elon Musk did recently say that it's going to be mostly autonomous, so that's once again very bullish news for the longer term. For the short term, once again, not the best of things. Now, Tesla's volume was only 151 million, actually a little bit higher than yesterday. So it did drop on a little bit higher volume, but we are close to a very important demand zone simultaneously. Short volume going up again. We're seeing a little bit more shorting, some more selling pressure for the stock at about 60% of the volume. Now, finally, for Tesla, the price price ratio is decreasing a bit. This thing is actually dropping on a very consistent downtrend, and that really shows how sentiment has shifted the stock to show relative weakness. And I do believe this might continue into tomorrow, but even if Tesla is relatively weak, that does not mean that it can't bounce or if it's not like at a temporary bottom right now. And I do believe it's very possible. Berenberg, right now, they actually downgraded Tesla from a buy to a hold. That's part of why this thing was negatively performing today. And historically, on Thursdays, Tesla tends to be green only 48% of the time, and we're actually more green on Fridays about 49% of the time. So I'm going to be watching this during the later hours. And finally, the short interest is basically the same. It has been on a bit of a decline. I haven't seen this actually uptick yet. If it does uptick, that could actually tell us more about the future, but we're still waiting for important data and etc. So why might the market bounce tomorrow? Well, I basically told you guys that we were getting some interesting divergences for the stocks. Looking at the 1 hour time frame on SPY, I mentioned to everyone that we had this divergence that was developing yesterday, and this is actually now showing signs of basically playing out very soon. I'm saying this because when you look at the RSI back when SPY was at these very low levels, the RSI was actually around 40, 38, 39, basically between 30, 37, and 40. Then the RSI today actually reached a low of about 35, I believe it was, around 35 or so. But that's despite the fact that we actually made a higher low relative to this low. So the stock price is making a higher low. Our low is not at like 392. Now the low is at like 396. But the RSI is making a lower low. That's forming a divergence, telling me the market might actually try to bounce a bit. And on top of that, when you zoom out of the chart, I have this white line drawn out. I hope this is clear for everyone. This white line that's kind of downtrending. This is basically the descending broadening wedge resistance that SPY was stuck in for quite a while. I can actually show you it on the daily just so it's clear. The white line, which was our major resistance, basically stopping SPY for quite a while. Whoops. And this is important because this previous resistance is now going to act as support once we actually, retest it, right? See how this was major resistance? So now on the 1 hour time frame, when SPY was dropping, we actually saw it retest this as support. Let me actually get back to it on the chart. I think my chart got kind of messed up. But this is important because, look, SPY, if anything, came all the way down just today. We retested this trend line, came very, very close to it, just a tiny bit of below it. Then we actually pushed right above it almost immediately. This is also a very important 0.707 retracement level on SPY we bounced off of. So I do believe the temporary bottom for the next couple of days is most likely going to be 396.59. So if you're bearish on the market, this is just hypothetically, if you're hypothetically very, very bearish if some bad news happens, 393 is going to be the next target if this does fail. If you're bullish, you're going to be watching for a break towards 400, if not above it, to about 401 or so. What do I think is going to happen? Well, based off the fact that we bounced, based off the fact that we got a lot of buying from algos, the algos are getting adjusted right now. They might continue to buy. And based off the fact that max pain for tomorrow is at 400 and there's a very, very high put to call ratio for Friday. This is all telling me that the shorts might actually end up getting squeezed a bit. The market makers might try to prop up the markets again, as they've been doing for the past couple of weeks on Thursdays to Fridays. And we might actually see the market bounce and try to push for above 400 for tomorrow, if not 401 or so. And that's very close to where the 200 EMA happens to be on the 1 hour time frame. So we might see this thing hit 400 to 401 for tomorrow/Friday. And if it doesn't happen tomorrow, once again, it's most likely going to happen by Friday, but I'm actually thinking it's going to start as early as tomorrow, and we're going to see a big shift in the overall sentiment, at least to some degree. For Apple, I'm seeing something else very similar. I think my chart just got messed up. The heck just happened? But anyways, I think this happened because I actually zoomed out and went really far back. What's very interesting about Apple is Apple's holding up a lot better than the overall market. It's showing some relative strength. And this in turn, if it does continue to hold up like this, we're going to likely see Apple just continue to help the QQQ push up in many different tech sectors out there. So going into today, I'm just trying to use the hourly when doing this, and I do apologize for that. Looking at where we actually bounced off of, Apple came very close to filling this gap. It's going to likely try to bounce, try to keep going just a little bit. And if this thing does retrace to fill the gap, I mean, it is possible this thing comes down just a little bit. Maybe the market drops a little into open, we gap down. Then this thing just gets bought up. I could see this thing is slowly pushing for 155 very soon. For Google, very similar trend as Apple. It came down pretty hard. It might come down to fill this gap around the low 94s, and I'm expecting a nice bounce and a push up to about 95, if not all the way up to 96. IWM, just to be blunt, we most likely saw the bottom on it. We're about to get a PPO crossover. We might see this thing go for 188 very soon. For Meta, I'm just going to quickly go over these, by the way. This thing, in my opinion, this thing is trying to bounce. It looks like it bounced off this 181 level. The PPO is still a little bit open, so it's not looking as strong as the overall market. But if this thing does actually, because it's actually holding above the 0.236, I can see this thing slowly approaching and trying to get close to about 187 or so. I could actually see it trying that. Very possible. The triple Q, in my opinion, it's almost forming an inverse head and shoulders. It's about to get a crossover on the PPO. Got a really, really nice bounce today. And I believe this thing might try to get to about 300 a share. If it tries to get to 300, that could be bullish for the tech sector. And it might be dragged by Apple particularly. Maybe Tesla could help. I don't think Tesla's going to help like that much. Looking at Tesla, 180 is where Tesla actually tried to essentially bottom at, and we actually held it very nicely. Now, if Tesla is going to be bearish, if you're a bear on Tesla, you're going to be watching this thing break below 180 and start testing about 175. That's going to be your next target if it fails at 180. And I do believe Tesla might retest 180 tomorrow. I mean, even if it breaks a little below it, I still believe it's going to try to bounce. And if you're like bullish on Tesla, you're going to be watching for this gap fill around this 187 area, followed by a retest of the 190s, very low 190s, which is where the 50 EMA happens to be on the hourly. And that is actually acted as a resistance level, so I do think it could actually try to retest it. The 200 EMA on the hourly happens to be around 188, very similar to where the gap fill is. So what do I think is going to happen? I believe Tesla's going to try to get a bounce. Now, I'm not as certain about which day exactly it's going to happen. I think it's most likely going to happen tomorrow, but if it doesn't happen tomorrow, then most likely Friday, right? But once again, I believe it should happen tomorrow. All right. And I think that Tesla's trying to bottom around here. We have a nice demand zone between that 177.5 to 180 area. So it's a very, very important zone. And I think that Tesla's going to try to hold this. And I think the market might actually follow what I was saying earlier. And that is the market moving in just one giant algo. Meaning if SPY starts to push up, right? I was showing you guys that in the beginning. SPY got a nice push up. So did Tesla at the very end of the day. So did the QQQ. The market moved in unison. And the market has a tendency of doing this. Now, I think tomorrow initial jobless claims might be a little hot. So the market might pull back a little bit. Tesla might open around like 180, maybe a little lower. Even if we do open around 177.5, completely fine. And then I believe it's going to start getting bought up around here and start to push up. And we might actually see Tesla get very close to 185 and maybe attempt to fill the gap. We could get stopped around gap resistance for Thursday and maybe fill the gap for Friday. But as long as we do try to bounce off of here and start to show some strength and start pushing up, there's a good chance Tesla will fill the gap over the next couple of days, meaning Tesla could make its way all the way back up to the high 180s, if not 190 very, very soon. The odds are in its favor for it to do that. Once again, The QQQ is showing signs that it might want to bounce. So is SPY, with the bullish divergence already showing signs of playing out. So are the market makers and other institutions artificially propping up the market. Once again, don't forget that we have CPI next week on Tuesday before the market opens. And what tends to happen during big events is the market tends to make a consistent move as we approach it. And in this case, it's looking like the market might rally as we approach it. That's not always a good thing, by the way. But if that's the case, this means Tesla could get a mini rally all the way back to the 190s, very low 190s. It's very possible. So it is trying to base around here. I'm going to be looking for a bounce tomorrow, most likely tomorrow for Tesla. And I want to see this thing get to around 185 after we bounce. In the morning, it's going to likely be slow thanks to the data coming out. It might drop to about 180 might hold. If it's a little lower, completely fine. But as long as we get right back above 180, we're most likely going to bounce. We're most likely going to see Tesla reach the mid 180s and try to fill this gap. If it fails tomorrow to fill the gap, we could end up doing it on Friday. All right. And I think the overall market is going to help it when it comes to making a move like that. For the dollar index, it is starting to flatten as it gets higher and higher, and that's because resistance is getting stronger. But overall, the dollar looks bullish to me. Like for the much longer term, it looks way more bullish, signaling that the market likely has a big pullback coming later on, maybe as we approach the second half of March going into like April. But the dollar, in my opinion, is starting to like consolidate, trade a little sideways. This could be correlated with the market actually improving its performance. And finally, before I end the video, the last thing I'm going to talk about is the VIX. The market might bounce, okay? And this could actually cause the VIX to come down. We're getting a sign based off the PPO and also the MACD. The MACD is showing some weakening momentum. The momentum is weakening right now, and we're about to get a crossover to the downside, meaning the VIX is most likely going to reach around 19 flat, if not the 18s very soon, maybe as soon as tomorrow. And if that's the case, this is likely going to happen because of the market pushing. Once again, giving me a sign the market might bounce very soon. Now for Tesla, I am anticipating a potential bounce, all right? As long as we don't get hit with very negative news, I do believe Tesla could bounce, and I'm hoping that that ends up happening. I think it's very, very likely based off all the factors I just mentioned. With that said, thank you all so much for listening. Please have an absolutely incredible rest of the day. Remain calm, cool, and collected, and I'll see you guys in the next one. Tesla to the moon, because the long-term future is still incredibly bright, and peace out.